Mortgage Mark, let's talk about escrow accounts for refinances. Guys, there are like a bunch of videos we have about escrows. If you don't know what an escrow account is, check it out. Hopefully, you probably already know something. If you're doing a refinance, maybe you already have one. But if you don't, check out what an escrow account is. So once you know that there's an escrow rebalance, know that there's something different for new construction. But let's talk about a refinance. Whether you have one or not, doesn't really matter. The biggest thing, guys, is we're going to set up an account, an escrow account, the piggy bank with your name on it. And the biggest factors is there's no real generic answer for what we're going to collect. Reason being, what we're going to collect is based on when your insurance renews, which is different for everybody. So when your insurance renews and when the taxes are due. So in Texas at the end of the year, but when the taxes are due, and then when you're actually closing. I know, so there's three components. What date are you closing? When's your insurance renew, and when are the taxes due? That will determine how much gets collected at closing. So if you're refinancing in Texas at the end of the year, and the tax bills have already been paid, and let's say your insurance renewed in December, so the insurance already got paid, the amount to set up that escrow account can be really small. It can be pretty insignificant and minimal compared to normal. Let's pretend you're closing, that same person may be closing in, let's say September. Or October, let's say September, October time period, taxes haven't been paid. And maybe the insurance is also still due in December. You got a really fat escrow account, a piggy bank with your name on it sitting at your current mortgage servicer. You're gonna have to start a new one at closing. Now there's different ways to talk about it. You can net escrows out, things like that. But for right now, let's just go with this. You're gonna owe a bunch of money at closing. You're gonna have to set up this brand new escrow account because in 12 months property taxes are about to get paid. 12 months of your insurance about to get paid, you have to pay that at closing. So when you set up that new escrow account, the new piggy bank, that's got to be done at closing. So for refinance, once you refi and you close, the old piggy bank comes back to you. And it should be pretty comparable to what you just put in the new one. So it may be that you're out of pocket, but it's thousands of real dollars, guys. So for refinance, for escrows, let us know. We're going to walk you through it. It's the first thing we do, but just realize the number can be very big, can be very small. Whether or not you want to refinance predicates, if it's predicated on you writing the check or not, that may be the decision on why you will or won't. But call us if you have any questions. We'll walk through your specific example and make sure we take good care of you.